Hey guys, Mike here. So you like the videos I put together last week for earnings, so I'm gonna make this one short and sweet, use the same format, and I'm only gonna cover stocks, not the big boys either way, that can really affect the market, and more importantly, ones that can absolutely give us an indicator whether or not our economy is slowing down. And what I mean by that, learn the term discretionary spending. If you don't know what it is, that is money that is left over after you've paid all your bills that you spend on vacations, going out to dinners, your wife getting a pedicure or something, whatever it is, buying the dog a new chew toy, that is discretionary spending. Some of these report on that kind of stuff. So if you see their businesses slow down, that could mean discretionary spending is slowing down, which is like the first sign you'll see when it comes to a slowing economy, obviously, because that will affect everybody's earnings, and that's how it affects the stock market. AMD, obviously, being a semiconductor stock, that whole sector has just been hammered, all right? And so we're going to go into their earnings, and then we're going to go into the other ones and let you see how they're doing. 3 were good. 1, you'll see, oh, God bless it. It just tanked after hours, okay? And so if you get anything out of it, hit the like and subscribe button, and let's go ahead and start off with AMD. As you can see, AMD is up, and I'm going to tell you right now, in times like this, in this market like this, you got to celebrate these types of victories. And the reason why, because if AMD would have missed earnings and it hadn't, and I can't remember, then you would have saw that sector just get taken back out behind the woodshed again, which I don't think it's ever got out from behind there, and just get hammered. And I mean, it would be even worse than it is now because they just don't miss earnings. And of course, the forward guidance is huge. Let's hear what they did and what they had to say.
AMD beat earnings every quarter out of the past 5 years, and this quarter, no different. The company posting revenue that grew 71% year over year. Adjusted earnings per share came in at $1.13 on revenues of $5.98 billion for the first quarter. Keep in mind, though, AMD closed its acquisition of Xilinx in February, so it's actually the first quarter to reflect Xilinx numbers. The CEO stating, quote, each of our businesses grew by a significant double-digit percentage year-over-year growth, led specifically by server processor revenue. And I'd like to point out, too, guidance for revenue came in at $6.5 billion, which is above estimates.
And that's what the big thing is, the guidance, okay? And just because this is one of the biggest competitors in this space, okay? And so the fact that they actually beat top and bottom, gave actually guidance that was actually above what people thought it would be, hopefully they can hit it, is a good thing. It shows promises, and the sector's just been so beat down. I think it's one of those ones, we'll see as far as how it's going to react tomorrow, but the other ones were up in after hours as well, so we'll see if it pulls up. Unfortunately, for any of these stocks we're talking about, guess what? The Fed's meeting tomorrow, and so Powell's going to speak, and so we'll see what happens on that. But it won't hurt, should not hurt the market, let's just say that. And so that's a big one, okay? This one, next one coming up, is actually going to tell us about discretionary spending. And so I'm talking about Airbnb, and you can see the stock is up in after hours, and it's holding during this conference call, which is a good thing to see.
Let me run through Airbnb's results first. It's a beat on every metric that I am seeing. Revenue is better than the street expected. A loss of 3 cents per share versus a loss of 29 cents a share that was expected. By the way, the street is expecting a net profit from Airbnb for the year, so that goes beyond that positive adjusted EBITDA number. Despite expectations for strong demand to continue and surpass pre-COVID levels this year, the company expects the average daily rate, the ADR in Q2, to be flat on a year-over-year basis. It was only up 5% in the last quarter, so that is a major deceleration from the last year, but do keep in mind it rose a lot over 2021, partly the effects of inflation as well as the mix of bookings they were seeing. Also just want to mention, bookings topped $100 million for the first time, so that exceeds pre-pandemic levels.
And so with that one, I wasn't so sure how I was going to report because I wasn't sure how strangers would feel with people staying in their house after the pandemic versus pre-pandemic. But obviously, let me know in the comments if you're using it. A lot of people are. And so that kind of lets us know people are still spending money. I know plenty of people that are traveling. They can't wait to get out this summer when they're out of school. So it seems like that industry should come roaring back. We will see. Again, we'll have to look to see if the spending stays up or drops on discretionary spending. So this is one to watch on that. This next one, oh boy, things did not go so well.
Lyft shares are up by 3.5% in the after hours, beating on the top and bottom line here. An unexpected profit, adjusted EPS of 7 cents versus a loss of 7 cents per share expected. Ride volumes are at a COVID high, seeing strong demand here. Active riders, however, slightly below the street's estimate. If you recall last quarter, that sort of sunk the shares in the wake of those results.
And as you can see, that forward guidance sunk them again because, oh lordy, down 26%, and after hours just fell off a cliff once they started speaking. And unfortunately, if you own Uber, which I will confess I do, and you can see that one's getting punished too. It is down a whopping 9% right now, and it reports tomorrow after hours. And basically all you got to do now to drop, that far down, just guide down for the next quarter, which they actually did. And I think they're probably having troubles trying to get drivers as well. And I can almost guarantee you that option players will be buying calls tomorrow to try to see if it fills the gap. Just a guess though. Okay. The last one, this right here, another discretionary spending. Okay. You don't need a cup of coffee and a bagel that costs $10, folks. As we can see, Starbucks is up 5%, and the CEO is on the conference call as I speak.
He's got a mixed second quarter. Your EPS coming in at 59 cents adjusted. That's in line with estimates for the quarter. Revenues a beat here, 7.64 billion over 7.60 billion estimated by the street. Global same-store sales up 7%. That's in line. The Americas up 12%. That's also a beat compared to estimates of up 9%. International markets, though, continue to struggle. Same-store sales fell by 8%. That is worse than expected. And in the all-important market of China, same-store sales fell 23% due to ongoing COVID restrictions.
And so how Starbucks held up as well as it did after reporting that is beyond me. I have something they're probably going to do a big share buyback and everything else. Watch out for that. But again, this is another one. Are people going to continue to pay that much for coffee, bagels, and whatever great foods they have there, right? And so that's something else we're going to have to watch, okay? And so as soon as we see cracks, and especially when it comes to buying for our pets, buying that coffee in the morning, getting Airbnb, going on vacations, that's stuff you just don't have to do. And some people can't afford to do it anyway. That's what we're going to have to look out for. And that's why I like to pay attention to these stocks and these types of earnings. So I'll try to bring you, just let me know in the comments if you want them, other earnings this week that really can absolutely have an effect on the market, or kind of give us an eye on what's going to be happening down the road in the future with their guidance, okay, when it comes to the spending and stuff. So hope you got some out of it. Hit the like, subscribe button if you did. I really appreciate it. And I'll see you guys tomorrow.